Good morning. Today is September 8th, 2011. We're going to be doing another review of the market movements in the SP 500. We're going to start with the weekly trends, and then we're going to dial in closer, and then we'll look at daily trends, and then we'll look even at hourly and some of the minute-by-minute trends to see what's going on with the market. I think what you'll discover here is, like many people, this is somewhat of a trader's market, that there is a high degree of volatility right now. But let's lay out the case for that real quickly. The first thing I'd like to do is set up a couple of reference points. So let's look at the high of the market and the low of the market down here in the last cycle from 2007 all the way to 2009 in the correction. And then I also want to look at these moving average patterns where we see here this is a forward-looking 21 day, or I'm sorry, 21 period moving average, and we're looking at weekly periods. So I'll just rest this sort of on top, and then on this curve down here, and we'll put one more on this curve here, and one more at the top. And so what you're looking at is base point, point, high point, low point, and we're just establishing some of the ranges here. Now, what I'm also going to do is use a tool for measuring Fibonacci retracement. It's one of it's a ratio that we like to use, and so I'm going to set that up from peak to trough here. And what I find very interesting is that these ratios align pretty closely with a lot of these moving averages that we were just looking for. Of course, the top of the ratio and the bottom line up perfectly, but this 50% range is fairly interesting to me. And so what I'm going to do is draw a box right here that more or less encompasses these two lines. And we'll just sort of float them around and tighten those up a little bit. And that is a point of interest to me, this range. I'm going to put a little bit more chart on the screen here. And so we see this, and notice the moving average falls in here as well, and it goes a little bit above that. I could make the case, let's go grab the entire moving average trend. So we'll grab this trough and this peak, and they hover around this line. And either side of it, it's a range, right? It's a ratio. This is not an exact science. There's some art stuck in here as well. Well, okay, let's go ahead and take these lines back off because we're going to get real busy in a hurry here. And now let's dial in to some daily analysis. So we're no longer looking at trends year over year. We're looking day over day. But we do have the last 200 trading days. So this is still over a year's worth of data. In this case, we've got a couple other things to consider here. We're going to look at a shorter time frame, and let's look at this same Fibonacci range. We will look from, we're going to go two different directions. We'll go from the top down. So this is the peak. Whoops, wrong tool. Remove that. Let's go back here. We won't use the fan. We want to use the retracement line. So we'll come on down to this point, and what we'll see is around this, once again, I find this kind of interesting, but here was a moving average that started back here, and we saw it gather again around this 50% range. And sure enough, here we are, close in this 50% range again on a daily market move basis. So if I were to bring this down on top of the moving averages, look at that, peak, peak. I could extend down into the trough here. I'm not going to. I'm just going to leave it as a fairly narrow band here. Only I'm going to change the color of this so we can see it a little bit easier on the graph. So we'll make that sort of our green band because it's close to where we are. We could even make this one, maybe we'll do it a shade of red because it's below where we're at now. So we'll just show that this range historically is a little bit below where we were there. Let's get this line off, and now we're going to do the opposite. So we came from the top down. Now let's look. Want to know, well, where could this market potentially go? So let's look at the opposite, which is, well, this was the low that we had in July, and we can climb on up to here, and we'll look at these patterns, and sure enough, there's 50%. We just flipped them around. So we're gonna zoom in on a time frame now. Let's get a little bit closer. And let's look at, say, from July, the retracement that we've experienced just from July. See where our ranges fall. So this was a peak down to a trough right here in August. And Our 50% range is slightly above. Our 38% range down here, 23%, which remarkably, look at this line, is sitting right on the range that we experienced. Our moving average came down and almost touched. And then here we are with the price point right in this green band here. But here's our 50% line. We're not in there, but let's go ahead and highlight what's going on. And since we're not in that time period yet, we're going to make this blue. All right. So now we have a blue band, and this becomes, looks like some upside potential resistance here. And we've got a couple other bands that we could put in here if we wanted to. But the next one would be, this is the more extreme, would be right up here. Again, we'll make it blue so it's easy to identify color coding here. Now we're going to clean this up off the screen because, again, the lines get real busy in a hurry. But we'll zoom in further, and now we're looking at just the last couple of months. And let's take our time frame all the way down to an hourly. Now we can see the bands that we've put in place here. And back through August, moving averages came down, swept back up, swept back down into our range, swept up and nearly got into the new blue range that we saw here before falling back down. And this blue range here, we actually saw the price movement made it in, but the moving average never sustained that move. So our price high point looks like was on August 31st at a high of 1230.71. And sure enough, this range that we set up around that 50% was 1221 on up to about 1236. And the next range above that was 1253 to somewhere in the 1266 range. And then down below, this red range, 1159, down into 1077. Well, what these bands are really telling me is that the market can't make its mind up right now. I mean, it's made its way down on a pretty aggressive correction, and then we've sort of seesawed back and forth in here. And I don't think there's a tremendous point to getting any more closely pinned in. We're using an index here, so if I was to shorten my time horizon all the way down to, say, 5 minutes, what we'll see is, market trends that day to day. Here was day moved up yesterday, gap down, and then and moved up the day before. And as we look back through this, just tremendous day-to-day swings. I mean, we were up in the range here of looks like a high of 1230 back on August 31st, and then here we are with a low down here at 1140. So a 90-point range on the 6th, and this is basically a week and a half later. So tremendous trading ranges being established here. So I'll look back at the hourly charts here, and what I would tell you is very little to discern other than high volatility. So there appears to be a tremendous amount of risk in the markets, and participants, the volume is fairly light, so participants are trying to figure out what news is going to move this thing. Is the economy improving or not? Is our government taking steps that are going to lead to higher profits or not? So a lot of jockeying right now, and I'm not here to make a political opinion about it, but what I am here to tell you is I haven't seen anything that's changed my opinion yet. That I don't see that the economy is fixed. I continue to say that we need more information before we can make any decisions, and the markets, from a trend perspective, certainly seem to support that theory. So with that, I would say best of luck to you. I'd be cautious about entering positions right now. As you get to the low end of this range, you may be able to pick up some bargains. If we see ourselves breaking below this, I would be concerned for a new low point, obviously, that could correct much more aggressively. But for the time being, we seem to be in a consolidation range that's quite broad, so somewhere 90 to 100 points plus or minus. Not particularly helpful for a long-term investor. If you're day trading, best of luck to you. So with that, I will bid you good day, and if you have questions, certainly feel free to reach out to us at info@littlejohnfs.com. All the best.